Welcome to RANsquawk's evening morning briefing for the 21st of May. Just taking a quick look around the markets, just gone through now 8 o'clock in London. First of all, starting where the US finished yesterday. Obviously the main event there was the FOMC minutes. Much of the anticipation there based on the outlook for the Fed as well, given that they released their forecasts. Last time they did that was since January, and they did reveal put a deeper contraction for growth both this year and the next. One of the most important things as well was that some officials saw potential need to buy more assets. That did give a lift to Treasury prices as well as bond futures. Allied to that as well, in terms of their jobless predictions for both this year and next year. For 09 in particular, they're now seeing a range of between 9.2 to 9.6%. That's quite starkly higher than the 8.5 to the 8.8% they previously forecast in January. As mentioned then, Treasuries did close higher in the pit, and stocks across the board, the Dow, the SPOOs and Nasdaq 100 did fall marginally, around 0.5% to 1%. So into the European Open at the moment, to see marginal reaction to the minutes. More so at the moment we're seeing slightly lower stocks, higher fixed income. Obviously quite a lot of US data to come today. But firstly, just taking a look at a few major European headlines that we have noted. In particular for the ECB, obviously in the last rate decision we saw that they announced that covered bond exercise to the tune of 60 billion euros worth. However, Bloomberg reported yesterday that they did indeed, according to sources, talk about a possible package of asset purchases worth as much as 125 billion, more than twice obviously that amount that was initially talked about, although largely ignored so far, but obviously worth noting. And out of the US as well, the former Fed chairman Greenspan, he spoke overnight. He did say that the financial crisis is yet to come to an end as borrowing costs tumble, and he also did warn that US banks still need to raise a large amount of capital, even more so than the stress tests had indicated. That was according to the former Fed chairman. A couple of other things in terms of stocks wise, obviously a lot of coverage to Bank of America, having been more than halfway now to repaying that initial, raising capital for that initial buffer that was highlighted in the stress test. In particular, the FT reporting now that Bank of America wants to pay back 49 billion bailout funds, possibly by the end of this year. It's obviously faster than the market is anticipating, so it could be seen as good for them when they open up on Wall Street later on today. Elsewhere from the UK, worth noting comments from the IMF for the UK banks. The IMF have warned Darling that must be ready to pump more capital into Britain's banks, Telegraph writing perhaps nationalising other high street names. So looking ahead on the calendar then, for 9:30 UK we're going to be eyeing the April retail sales report, and then later on quite a raft of US data due on the jobs front, initial jobless continuing claims, and then be looking out later on for leading indicators and the Philadelphia Fed survey for May.